So given everything we talked about, we covered a lot of topics, what is your best idea for 2019?
Capital preservation. I've been saying that for a number of months now, that this is a capital preservation market. I have investors that come to me and they say, what exactly is wrong with just buying the 2-year Treasury? And I say, I agree with you. I mean, what exactly is wrong with the 2-year Treasury yielding 270 when the 30-year Treasury yields the 10-year Treasury rather is 285. The S&P 500 yield is less than that of a T-bill. I think we're in a bear market. I mean, I still think that it's an interesting time to own commodities, which have actually done pretty well. I talked about them with you a year ago, and it feels like commodities are doing terribly, but amazingly, through last Friday, when I looked at it, or last Thursday, last time I looked at it, the Bloomberg Commodity Index is actually up over the last 12 months. Bonds are down, stocks are down, global stocks are really down. I mean, there's plenty of stock markets that are down over 20%, many on a global basis year to date. So this has been a capital preservation year. I did say in January that I thought the U.S. stock market would go up into the summer. I looked like an idiot in February because it wasn't going up. But I said it might go up as much as double digits, and then it'll end with a negative sign. And that indeed is what happened. I thought that would be the case because I was bearish on the bond market, as you mentioned. I thought the 10-year would go above 3%, and when it did, it would provide a tipping point. I still think that yields are headed higher in the United States. And I think it's mostly supply-based and lack of demand. So that, I think, is going to be challenging for a lot of parts of the risk market. So it's a capital preservation environment. I really think a short-term, I mean, as unsexy as this sounds, a short-term, high-quality bond portfolio is probably the best way to go as you head into 2019.